So market sold off yesterday after this Fed's decision of hiking interest rates of 0.25 basis points. So doesn't mean that market is afraid of hiking interest rate by 0.5 in the nearest future as they sold off that event. I would rather say that it's a kind of a realization and sell on the fact even rather than any other circumstance. So we can right now may assess that this chance of hiking interest rates by 0.5% is really of the marks. And right now, with that cracks in certain things inside of the banking sector, right now it's a bit closer to pivot than it was before. So we've gone through very different phases and phases of the market during recent quarter. What a roller coaster was it? So we've gone through the recession fears during this third and fourth quarter of previous year, up to soft landing in January, February, that led us to even no landing at all, that been commenced on February and going through March, with this fears of bank crisis in the US and Europe early March to yesterday. But what may come next? That's about today's episode. We'll go through also the certain correlations on crypto markets. So not only regulated, but also in the decentralized sector of finance will be covered today. So I'm very glad to host you today, and let's get on. So economy view, as you know, is the first one to study. So let me look it through. So the dot plot right now is getting to look like a bit more dovish to the days in relation to the days before. So the dot plot of rate forecast shows a 5.1% median estimate for end of 2023, unchanged from the last update in December. So this median looks like not very much has changed, but projection have risen to 4.3% from 4.1% at the end of 2024. So at one of the side of the coin, we've seen that this recent Fed's meeting has been more dovish than previous one. But as we don't know, we still have a nagging symptom of this not stopping inflation, and that's why the market finds that this eventuality of lowering interest rates right now might be marginalized for even for a bit more far-fetched time span. So is it a mid-grinder phase, as we are right now betting for not really that quick pivot? So even if that may come, if you just look through this interest rate trajectory upon recent 45-50 years, we have found that there were not very much revelations where those maybe I will. No, it doesn't work as I supposed. So as what I mentioned and what I meant was that when we are hitting a certain level of interest rate, there is a kind of a time to kind of a time that usually takes few or up to 9 to 12 months, where those interest rates may eventually be lower. So for the sake of this historical perpetuality, we may find that this time it may take us a bit longer than what we expect to happen right now. Yes, we do have a fastest hiking interest rate period in the history, but it will be kind of a simplification of assessment when assessing that with what the pace with hiked interest rates, we may go the same trajectory with that lowering tendency. So I would rather stick around to that this dot plot cringe, what I called, was over optimistic in my view. So the failure of free American banks would be a prelude to a crisis such as the one that laid global economics low in 2008, some economists say. And that's why we may, on the side, we may lower interest rates, but with this very heightened inflation in the US, it will be very unreasonable for Fed to pave a way out of its previously initially set trajectory. So that's why, even with this banking sector being thriving, I do expect that those hikes will eventually extend by the end of a first half of this year, and right after we may have a stabilization of interest rate by the end of a year. But the CME group and contracts for target rate probability right now are pointing that we might set a top at 475 and 500 units. So it's still around two hikes more up to April and May, possibly. Right after, we may see, even though the Fed may say that the pivot is very close, right now they cannot really put themselves off the mark when using the terms of that they are just transitioning from quantitative tightening to quantitative easing in a one day. So that's also something that recently spooked many bears that were betting for the major indexes are getting lower and lower. UBS has offered to buy back 2.75 billion euros worth of bonds it issued to investors just days before rescuing Credit Suisse. So UBS is trying to give a hand to all of those investors from 81, and that's possibly will eventually increase the reputation of UBS in terms of the eyes of those that have been engaged in the issue. And right now, banks, even though they have 600 billion in unrealized losses in the securities portfolio, may have eventually bigger problems than credit risks, unless those problems get eventually, I would say, covered up by this another fiscal drip injection, we may see those problems to pile up and eventually causing another elements of a cracks widespread among economy. So what about the market outlook? What about yesterday's price action of major indexes? And right here, let's have a look at SPX is reverting yesterday's major slide. So we've thought about it that this gap might get closed, and it was closed quite brutally right here with this exhaustion candle. We may try to find the eventuality of rising even higher, but we need a stable consolidation that should be the floor next to the recent very much strong bearish reaction. So just look at recently paved trajectory of mine. We have just hit the floor at the shelf right at 3900s with this take profit at 40.38. We are right now trying to build another possible consolidation before heading toward a previously set direction. So with this volume being located within this area of 3800 up to 39, I do expect that this will be enough to send the indexes higher, especially this SPX. All right, so let's head on to next element, that's crypto outlook. And inside of it, I have a very interesting correlation for you. So you have a return of the Orange King. By Orange King, I mean, don't confuse with Bitcoin Cash. I mean, Bitcoin Core. So Bitcoin at 4-hour chart right now is building higher highs, higher low structure. Whereas most of the alts, this is the chart of Ethereum, started to build lower highs and in some terms even lower lows. Ethereum is one of the more sturdy altcoins, but still represents the alternative sector related to Bitcoin, and that means that after that very strong ignition been commenced right at the beginning of a move, this was that recent sequence commenced at the first half of March. Right now we are after this post SVB crisis in a more risky territory. That's what also reflects situation on crypto markets. So BTC is holding very tightly, but the alts are breaking down, and we may have such scenario where BTC, this rapid reclamation of 4-hour trend, shows potential for the higher highs in the coming days. Another scenario might be where if it loses 4-hour trend, it is a very good chance for it becoming the resistance and raging back to 25k. Whereas else, where the alts may go, in both scenarios, alts are likely to underperform the king. So right now, as we have seen recently, the retail has joined the market, but usually after catching up that extended moves, it usually takes for them to suffer eventually. As you do know, the market favors the ones that are systemic and not impulsive to the reactions. So in the next few days and potentially weeks, the reaction should be under the mark of slides on many alts, aside of particular trends or tendencies, and there is still a chance of consolidation on BTC. So what might be in April for crypto, as we are right now heading unrelentlessly to a end of a month? So caution in our view. Caution in both directions is advised. For bulls, banking system isn't collapsing. BTC is not going to 1 million. And the other scenario is for bears. It's not a manipulated scam pump. BTC is not going to 0. So definitely, as we may study those both cases, you need to be reasonable in taking investment decisions. And on the other hand, if we just manage to I would say copy that type of price action that was back in 2019, we may have such trajectory of a move that is right now at the blue shadow color. And that's the one thing that may justify further possible moves up in the April and May, especially with seasonality and also China resurfacing the story of reopening with coming out of hard data production, metals, commodities, trade activity with Korea, and bank loans, etc. So this will be all bullish for crypto. Another narrative, positive, is possible hyperinflation for the world, but with this Fed hiking rates lower than expected, as before SVB, and employing quasi QE facilities is adding a fuel to the fire of hyperinflation story. Even though we won't get much higher inflation from this point, the inflation might get us into expectations, influence the inflation in a big way. To some extent, it might be a self-fulfilling prophecy, making Fed rising higher than now market expects. High rates bearish for crypto, and further bank problems with flying deposits. That's overall bullish. In terms of negativity, it's obviously ETH fork, even though it's good for investors of ETH, especially those that are staking. For the overall outlook of a price, it's a supply shock that may cause also a rotation to certain alts with such a supply being notable. Also, we are right now fighting with a SEC, Coinbase, the biggest exchange, or second the biggest right now, as this Binance has tackled and overtaken that. Right now, if you let me find out. Do I have that article? All right, no worries. So SEC provides no clear rulebook on crypto regulations and changes the rules at will. And right now, SEC gives green light to Coinbase. That was in 2021. SEC gave green light to Coinbase to issue stock and staking. Whereas in March of 2023, SEC sues Coinbase for issuing stock and staking. So, what type of credibility might SEC have? So, won't the law don't work backwards? That's the question, and the one thing I'm getting very, very dire and concerned about. So you may write down in the comments what's your stance regarding the issue. What's about the SEC? In my view, it's kind of a ball and chain for the whole crypto sector that is renowned for its growth potential. So that was about it. Right now, let's head on to market movers section, and right here you may have Bank of England interest rate decision that was at 4.25. So right now, Bank of England is slowing its interest rate hike trajectory, even though this inflation is really bothersome for them. So they cannot really put up such of a stronger type of intervention, as they are afraid of having their banks being cracked and the whole sector start fueling. In terms of other events you might have haven't watched or haven't tracked, that's new home sales right now at a much more better level than the forecast was. Whereas we are still awaiting for inflation rate of Japan, and tomorrow will be important day also for Great Britain, as retail sales has yet to be published. In terms of earnings calendar, right here on Wednesday we have Chewy that reported a better EPS than what we have expected. So that was, sorry if I haven't just shown you retail sales right here from Great Britain at 2 a.m. and new home sales at 1.1%. Bank of England interest rate decision at 4.25. Sorry if I have just scoured this facts. Sorry. Our earnings calendar today is looking quite under the sign of those value stocks as General Mills and Accenture, if I'm not mistaken, as those as I remember correctly, the value stocks. Accenture has recently publicized rising EPS. Right now it's expected to lower. So that's for Thursday. On Friday we have Centros Brasileiros, Eletrobras and Polyester to get published. And right now we are getting back to our presentation and discovering a trade idea. And what we have out there is, in my view, very interesting chart. Is this 100 US 100? So right now we are trying to rebound out of this tendency, but with this 4-hour chart, we can find that that impulse is something we won't possibly revert anytime soon. And for this time, I'm just erasing this type of scenarios in order to write another one. So after that reversal, it's a perfect scenario to bet against Nasdaq. And sorry, not the time. This time is exactly at right here, with the possible stoppage of a price at the levels that haven't been tested very significantly at 12.36. So that's possible objective, but we are right now trying to find a possible ceiling for this trajectory to correct. But at first we need to tackle with that type of demand located right here. So if we manage to get out of this floor at 12.43, I do expect that Nasdaq should move right higher. But for me, the basis case scenario will be US 100 to get to this level of at first 12.4, and right after we may see what will come of next. So in terms of this ratio of risk reward, it's not very high. It's just at 1.87. So if you are not very satisfied with this one, you may skip this one and wait for another opportunity. I will let you know in the next episodes. So yes, that's my view for the market right now. So thank you very much for listening, for sticking around, and always remember about being cautious and don't over leverage yourself. So I'm wishing you a great afternoon in the US or wherever you are, in England, Australia, or New Zealand, or Europe as a whole. So that's it, and I was very, very glad you decided to pop in. Thank you, and